Good day. This is Al Kleiss, joined with Bob Linneman today. Sponsored with us weekly Soy Market Watch. Already week 9. Wow. So it's Monday, June 9th, and we have a bunch of major USDA reports coming up, and we're going to talk a little bit about those. But first, I need to do the industry required risk disclosure statement, and this basically says that if you open an account and trade futures and options, you can lose money trading futures and options. This is the what I'm required by the industry to tell people every class, every seminar, every webinar I do. Also, the last sentence in the last paragraph, the opinions expressed herein, the opinions of the author only, not the opinion of the firm the author might be affiliated, associated with. So think about it, you put together with Team Kleiss, and certainly Bob is an important part of that group. So we're going to look at what happened last week, another very active week with a lot of news out of Washington and some very positive news, I think. Price summary, what to watch for this week. Look quickly at the charts. We have a major USDA report on Thursday, and then we're going to allow the people that tune into this to also go to our two big webinars here yet this month. So weather remains challenging for the Eastern Corn Belt and Delta, and so that continues to be a problem. We do finally see some hints that that might be changing in the week 2 forecast, but for right now, and when you get Western Illinois, Iowa, Minnesota, Dakotas, we're really looking good. Corn ratings, we usually start out high and then go lower, but right now we are coming in below the 5-year average. Soybeans, really not looking that good nationwide. We need sunshine. We need some heat, 69%, again, below the 5-year average. And what this suggests to me is that the record yields that the USDA has plugged into all of their supply demand forecasts are not realistic, especially for soybeans. We're just not off to a start to where we can get 51.5 bushels per acre. And it seems like we're getting rain, but a lot of haze, a lot of cloudy days. Last week, soybeans rallied, nice up week, 15-cent rally. Soybean oil came back, and that really helped beans late in the week. Corn closed 2 cents lower. Corn held critical support at 440. Probably most important was the fact that Trump talked with Premier Xi, and then instantly, I was just amazed, Bob, at how fast they put that meeting together. And they met in London already today, and they gave the agenda. Ag isn't really not on that right now. It's mainly about rare earth and computer chips. But hey, we're better off to keep talking with them. And so let's hope that they will announce in a written report on Wednesday what's going on. I think that should be positive. And Bob, that US dollar keeps moving lower, including today. So this is what we're looking at. What are your chart comments?
Yeah, I mean, last week we did break Al down to the lowest level since that April 22nd low, is what you see there. So we broke briefly below that support line, and then we kind of came back, and you can see where we closed a little bit stronger. So I don't know that anything has changed in the playing field for the US dollar that would say the bears are losing control or running out of momentum. I don't think that's the case. I think it's just is going to be a continued grind lower for the dollar.
Lower lows and lower highs. The trend is still down, taking out this support level in here, which suggests to me we're going to go down to 92 to 94. And that's really a great spot to be at because that's where the dollar was back in 2021, 2022, when we had good ag exports and higher prices. I work a lot with charts and different moving averages. This is the very long-term 200-week moving average. You can see when we went below that, we came down for a long time. This is the 100-week, and this is the 50-week. And we really have been going sideways for a long time in the soybean market, but this is called a golden cross. And you can see where we now have the 50-week trading above the 100-week. This is a very positive signal, a very bullish signal. Back when we went below this back in 2023, that gave you a very good sell signal. And when you're losing moving averages, you don't always sell the extreme high or buy the extreme low, but it really does help if you're a trend follower. And I think that soybeans are in an uptrend. July corn last week had closed down 442. The low came in at 433. The low so far today is 435. Soybeans, we had a high of 1060, closed 1057, nice 15-cent rally. And today About the only thing in green on my screen is the soybean market, up 1 to 2 cents. We went up to 10.62. So we're making higher highs and higher lows, and as Bob indicated, we are seeing the U.S. dollar continue to move lower. All eyes are on London, and I really think that until we get these announcements, we're going to see some pretty quiet, low volume days. Look for the details, any initial agreements, and most importantly, when will they meet again? If trades will blow up, and I don't think they will, the trade talks, that would be really negative for the stock market and grain markets. This time of year, we're always trading weather. The model shows some very nice rains, two major fronts going through the Corn Belt. Many of the dry areas of Iowa are scheduled to get rain Wednesday night, Thursday into Friday. Then it gets hot in the 11 to 15 day forecast. And so how much rain we get, and will we have that dry swipe kind of from eastern Nebraska right up to Rockford, Illinois? There's a stretch talking to Iowa farmers that's been dry. USDA crop progress report likely to show a slight improvement this week, but again, we're staying below the long-term 5-year average. Chart analysis. Bob, what does this chart show you?
We just continue to grind, Al. I mean, it's just a sideways pattern, and we don't have a big change with any news story, any headlines. I think like you mentioned before, the crop condition rating below the 5-year average. It definitely does. It has to catch the attention of the traders that if we can't hit those USDA target yields already in the first half of June, based on that information, where does the final balance sheet end? Where do we end there, Al? And we just don't have a lot of wiggle room. Even with 96 million acres of corn, there's not a lot of wiggle room. There just isn't.
And in the report on Thursday, I think we're going to see any stocks both this year and next year move lower again. So this is the soybean chart. Looks a little different. What do you think here, Bob?
Yeah, like you mentioned before in that long-term weekly chart, Al, this one with the moving averages, you can see that we're slowly starting to trend higher. We are making a little bit higher highs. Last 2 weeks ago, 3 weeks ago, we didn't quite get through that level of resistance, but we also didn't fall very far either. So in the bigger picture, we're building a base at the top end of this trading range, which is a great sign that we just get that bullish story or the weather does turn, and you get above that, that really opens the door to some much higher levels, Al.
Yeah, and you look at that 200-day moving average costing at about 1042. So we'll just have to see if that can go through. So this is important to watch and see which way we go through. So again, we're kind of locked, as you said, we're grinding sideways, 443, 430, support 465, 480. Beans targets above the market at 1073 and 1098. And boy, we've held those lows, 1046, 1050. And what's been amazing to me, looking at the weekly chart, working on the newsletter on Friday night and Saturday, is just how narrow the ranges have been. We're not seeing that. Key dates this Friday, the 13th is an important date for me. We'll watch to see what happens day after the major USDA reports. And then as a seasonal trader, I'm always looking at anticipating what the markets will do. Longest day of the year, option expiration. Let's just see where we go. These are some very key pivot points, times when I can anticipate the market putting in a high or a low. Switching gears, Thursday, we get the crop report. Again, these are a lot of numbers. Last year, we had ending stocks of 2.022. May, it went to 1.415. Trade looking at, I think we're going to be down to 1.385. And 6 months ago, last August, this was like at 1.8 or 2 billion bushels. So, Bob, every month this number just keeps on coming down. Your thoughts?
It does. It just the trend is lower, Al. The
Yeah.
stocks are tightening. I think the exports are still strong enough to, like you said, cut that number even further. It really is.
And soybeans, we had 340, which is, pretty large number compared to our usage. May it was at 350, trade looking 353. I think the door stays wide open for exports, and this goes to, stays at 340. One of the rules I have with these USDA reports is unless there's a compelling reason to change it, they usually won't change. Wheat number, this is kind of a dog. This explains why wheat prices have been so low. We're up to 845. And so when you look at these numbers, this would be for the ending stocks, the end of June for wheat. ending stocks for corn and soybeans the end of August. We'll also look ahead in the report on Thursday to 25, 26. And this really gets complicated because you have to look at crop size and projected usage. But there again, look at this number on corn, 96 million acres of corn. And I think we're going to see this number go lower. Bob, your thoughts?
I agree with you, Al. This trend here from last month to this month, I think could set the tone for the summer. It really
Yeah.
could. And that downward trend, it doesn't need to be a lot, but just the trend, Al, I think is what traders are going to be watching for.
And when you look at this ending stocks of soybeans, 292, 295, I mean, this, 5 or 10 million bushels that far out is not a big deal, but look at where we are versus a year ago. We need a good soybean crop, or this thing can get pretty explosive later this summer. So this will be an important number to watch. And wheat market remains very doggy, with both U.S. and global supplies staying more than adequate. Now, we're going to invite you to come into two different webinars. Usually these are for subscribers only, but we start these at 10:45. These have been very popular. And then June 30, the big USDA annual acreage report and quarterly grain stocks. And so you can just go to join webinar, enter that webinar ID, and the password for both of these will be summer. So I hope that you can take care of these. I'll put our toll-free number up in here in case you can't record these or you'd like to call in and get it. But we sure encourage you to come in and join us in one of these fast-paced webinars. And Bob, we get 200-300 people coming in. These are a lot of fun, and our subscribers just love them. So I'm going to open this up to everybody in the Iowa Soybean Association here for the next two very important webinars in June. Any final thoughts, Bob?
No, I think that just the trend for this report this week, and then at the end of the month, it'll be a big one.
Yeah, this always makes for a very active months, and hopefully we'll get some positive news out of London as well. So, again, I want to thank the Iowa Soybean Association, their staff, directors. If you like these programs, let them know. And if you have any questions or you need help registering for the webinar, my office here in Wayzata, Minnesota, 888-345-2855. If it works better to email, this is my email, comes directly to me. Have a good week and stay safe.